What is going on, everyone? It is your favorite trading professor, the fundamental finesser. What's going on? Okay, so today I want to show y'all a for those that want to get into like swing trading with fundamentals. I want to show y'all like a dead easy strategy that has an extremely high accuracy rate and is again, what's the disclaimer? This is not a financial recommendation, but can make you quite easy money, honestly. Um, so, yeah, let's talk about it, right? Because I feel like everyone is on like the lower time frames, like trying to day trade and stuff like that, and they're just getting chopped up. Especially beginners that don't really understand the market very well. They're just dying by 1,000 cuts. And so, it's funny because I was unprofitable for like I want to say it was when I started in 2015 when I was in high school, and I was unprofitable until the the end of the first year of the pandemic. So yeah, so I was unprofitable until 2021, and it wasn't until I discovered this guy that was trading fundamentals. I'll just say his name, Sam9Y, on Instagram. Absolute beast. He just day trades gold now, but back in the day, he had this absolutely just insane fundamentals strategy. So he would combine like technical analysis, like retail technical analysis, like literally like Fibonacci support and resistance and stuff like that. He would combine that with fundamentals, and that was the first like approach to the markets that got me profitable, because I just could not see what was up and what was down on the charts. Um, and Yeah, so once I applied like fundamentals, I became profitable for the first time, and that is what taught me technical analysis. I know it sounds kind of crazy, right? But when you're first learning technical analysis, like there are a bunch of like setups that kind of like look the same as each other, but are actually like one of them is the A+ one and one of them isn't, and a lot of the truth of what the market is going to do, or if that setup is good, is actually in the details, which I don't know. Maybe I wasn't smart enough or something. I couldn't see through it, for years. And so the fundamentals were my guiding light. That yeah, just changed everything for me. So let's talk about it, right? Now, I told you guys that what I'm about to teach you has a really high win rate. Now, the only problem is this kind of setup, this kind of setup only happens, I want to say like 8 to 12 times a year. 8 to 12 times a year. So what you get in like in win rate and accuracy, you sacrifice in frequency. Because what you're doing is you're trading institutional flows with this strategy I'm about to teach you. So we're going to discuss the fundamentals real quick. We're going to do basic fundamentals and then super basic technicals. Again, like the way that I trade goes deeper than this. Like I mostly day trade now, honestly, but I'm just kind of trying to show y'all like how to reliably generate profits from the market with swing trading and basic fundamentals. So technicals is going to be super basic today. All right, so let's just start with the fundamentals. So when it comes to let me make this white. When it comes to the fundamentals, I want you to understand that there's a difference between trading news versus trading fundamental narrative. Now, when I was first starting as a trader, all traders just only traded technicals, and honestly, it's the same way now, pretty much. But I couldn't find a single trader that was even remotely suggesting to trade fundamentals back in the late 2010s. And the problem is that they were trying to trade fundamentals in a way that was too easy. Like you know how like people will quote unquote pattern trade technicals, and they're like, oh, technical analysis doesn't work, right? Well, people would do the same thing with fundamentals and then be like all like umming and ahhing when it doesn't work, right? So they'd be like, oh, I'm gonna go to the fundamental calendar and I'm going to like uh, trade the numbers of every release or whatever. Like that's the way that they would approach it, but that's not how it works. You those independent like news releases are just a small part of the entire fundamental story. Like you have to understand the full fundamental narrative, right? So yeah, trading news is like, oh, okay, like I'm going to go and look at I don't know, housing data is coming out for like Euro tonight, and if the numbers are good, I'm gonna long it, right? Like that does not work. That does not work. Of course, it doesn't work. Like if that worked, everyone would use it. You know what I mean? Like it's just too easy to apply, right? So anything that like it, any really good way of approaching the market is going to be hidden behind at least some kind of level of effort or sophistication. Okay, so fundamental narrative. There's a lot of things that kind of go into the fundamental narrative, but if I were to tell you the one singular most important thing that influences like changes or big swings in currencies, it's going to be interest rates. Okay, it's going to be interest rates. So this is the way that I want you to see it. The market moves based on if a central bank is expected to cut or hike rates. All right. A market move or currencies move based on if a central bank is expected to cut or hike their rates, right? And so as we get closer to a central bank meeting, and again, these meetings are planned out ahead of time. You know what I mean? And the central bank is constantly like making announcements, which you can go and research. Just go on Google and try to find like sites where this type of information is available. And the central bank is very like forthcoming about what they're going to be doing at the next meeting. And so they change something called the yield, right? And the yield of a country influences how much like economic or how easy it is to create economic growth. Now, I'm not going to go too in depth into the why behind interest rates because I just want to kind of teach you the strategy, right? But the central banks telegraph this information. Okay, so you're going to go and you're going to research whether or not like what are the central banks of the world doing, of the major currencies, right? Like there's certain currencies you can play with, right? Like you're just going to use the majors. You're going to use USD, Euro, GBP, AUD, NZD, CAD, and CHF. Oh, I'm missing one, sorry. And JPY. And you're going to go and you're going to find out what the central banks are doing for all these major currencies. You're going to write it down on like a piece of paper or a Google Doc or whatever to keep this information with you. Okay. And after you do your research, what you can do is you want to pair a strong currency with a weak one. Okay, so what you're going to do is you're going to take a currency that's either hiking or cutting, and then you're going to pair it with a currency that is preferably on the other side of the spectrum. So expected to, if one is expected to cut, the other you want to find expected to hike. If one's expected to hike, you want to find the other one expected to cut. Now, you can pair a strong currency with a relatively neutral one, and that'll still play out really well as well. So that's an option for you too. Yeah, so you're going to do all this research, and then you're going to figure out these numbers on paper before you even look at a freaking chart, all right? Now for me, I use my own special tool, the macro zone, which basically pulls all of the financial data from various different sources that I fed into it, and analyzes them to basically give you the narratives for every single pair. Okay, and so what I do is I don't even do the research anymore, because this does the research for me. I have all my geopolitical news. This is kind of like my swing setup here. I have my day trading setup. That's a thing for another day. But yeah, so what I did was I paired the euro, which is expected to hike, okay, with Canadian dollar, okay, which it looks like the economic data hasn't been all the best for CAD, as well as peace talks in the Iran war beginning to make progress. People are very hopeful, and as you can see in the stock market, because the stock market keeps on like going up to all-time highs, you know, that kind of approach is going to make CAD go down, because oil is also going to go down as well as the crisis gets better, and hope for the crisis wrapping up gets better. Okay, so that's my fundamental idea. My fundamental idea is Euro CAD. And also, if I'm not sure about a fundamental idea, I can basically ask in the fundamentals chat that has all the context loaded in it. But yeah, so let's go back here. So I have my fundamental idea, and there, let me see. Let me turn on replay here. Let's say we're right here. Now, I know this looks like hindsight now, but this is actually something that I marked up beforehand, among other setups, you know, that I took. I didn't take this one in particular. I took a different one, but it's all the same, right? When you have the fundamentals, this is what actually moves the market, and if you're patient enough to be able to be in tune with what the central banks are doing, and then when a central bank basically comes out and telegraphs what they're going to do, you use that knowledge to formulate a fundamental thesis. Okay, so euro is hiking, Canadian dollar economic data isn't doing all the best, plus hope for peace in the Iran war. Maybe I'll make other videos about fundamentals and how to read them and all that stuff, but I hope you're getting the general gist of this. So what I do from there, I go on the chart, and I'm going to be looking for a long here. Now, again, I just want you to know, you probably saw before I put it on replay mode that the price went up here, and you're probably thinking like, oh, but it already went up. No. The fundamentals telegraphs what it's going to do, and then it does it. This is the most powerful thing about fundamentals. This fundamental conclusion was created when price was at the end of the way down, okay? And then it moved afterwards. So that's one thing I want you to know. Like, the fundamentals, it's not something that's like automatically priced in, right? Like, it takes a bit of time for it to get priced in. And I don't know, it's so interesting. I hear some people saying online that like Forex is so efficient, but that's because your like basic trendline strategy, trendline breakout strategy, breakout retest strategy has been like patched. You know what I mean? If you know what you're doing, no market is too efficient. Like, what is that? You know what I mean? Yeah, like price needs time to like price in the fundamentals that start like changing and mutating and evolving, right? So I digress. Now, I don't want to get too difficult with the technicals here, because I can go into like liquidity and confluences and all that, but I just want to show you like a really basic way to see this. You're going to identify the last impulse leg of price, okay? So for here, that's this leg all the way up to this leg. You can go into the 4-hour time frame, as you can see here. All right, this leg right here, all right? The first thing you're going to do is, I would recommend pulling out a Fibonacci tool, and I don't have numbers on this, but this is the 38.2 level right here. 38.2 level, maybe I'll write that in. 38.2 level. Okay, this is my 38.2. The first thing you want to do, so here, let me actually write this in a checklist. Start with fundamental idea. Two, identify last impulse leg in direction of in the direction of the trade. Okay. Then step 3, make sure price has retraced past 38.2. Make sure price, so you want to make sure that price has pulled back behind the 38.2 at least before you're even looking to take your trade, all right? Because the fundamental idea might be formed, but it might not be ready to move. So all you're trying to do is figure out where inside of this leg it's going to reverse, okay? Now, when it comes to retail, right, this concept that I'm about to talk about does not exist, but when you like start studying it, liquidity, right, you understand that the price has a chance to reverse every time it takes out liquidity. So inside of this impulse leg, you're going to identify all of the internal range liquidity. So what is that? That is basically in an uptrend, lows that are internal to this big swing, right? And you're going to map all of those out. And what happens is price is likely to reverse once it takes out one of these. Now, if the fundamental idea is strong, right, like the euro, the European Central Bank, the ECB, planning to hike, this shift just happened, right? So I'm trying to basically see the fundamental idea on the chart. And so if that just shifted, then we're going to get the shift sooner than later. So what happens is we end up taking this out right here. Okay, I'm taking this out. And oh goodness, I don't know how deep I want to get, but you also want to look for some type of PD array, that's like ICT speak, that is behind one of these internal range liquidity points. Okay, so for example, if we get equal lows here, that is massive buildup liquidity. We want to see if there is a good PD array behind it, and if there is, for example, this rejection block right here. Oh, oops. This rejection block right here. I'm trying to keep it simple, right? Because it's supposed to be more of a beginner kind of thing. And then what you're going to do is there's a couple ways you can play it, right? If the fundamental idea just shifted, right, we should expect to see that start to manifest in the chart, right? And so what you can do, I mean, I would put my stop a lot tighter, personally, but if you want to, you can here either put your stop at this low here, or you could make it a little bit more conservative. Just give it some room to breathe, okay? And then you could target liquidity on the opposite side, Okay. And as you can see, price starts to expand and we get amazing follow through. Beautiful. Yeah, next week I think the most prominent high is here. So this is what at least is probably going to be taken out before there's some type of pullback. Because price pulls back. Again, it's not just one-sided. Price can pull back after any of these. Boom, pull back, and then continue to the upside. That'll take a little bit longer. Yeah, so that's kind of the general idea of how you want to play this thing. So 4, map out all internal range liquidity in the leg. Once you do that, look for a PD array behind internal range liquidity to enter trade. And that's it. I know this sounds so simple. I know it sounds so simple, but the edge in this is that there's not a lot of people that are willing to do fundamental research, and then also have a basic level of technical analysis. You know what I mean? Yeah. So let's see what else we got. Is there anything else that I wanted to say here? I mean, there's a couple other details here, right? So number one, it's really beautiful if we can see equal lows setting up, right, and buy positioning happening here before we get these equal lows taken out into the entry zone. These equal lows make the PD array behind it even more powerful. So that's one detail. The second detail is that we are looking to get some type of sweep before price moves. Now, this is a sweep for sure, right? So you could have entered here, which this is exactly what I would have done, because I wouldn't be waiting for this sweep. But let's say that I saw this sweep already happen. I mean, the trade is a done deal after that, right? It ends up pulling back a little bit and then moving to the upside. There's a couple things you do. You could go to the lower time frame and look for a break of structure or something like that. Right? Boom, 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 boom to the upside, right? Take your trade here, something like that. You could also wait for, there's another ICT type thing, the SysD. You could have waited for that as well. Take your trade here, stops behind the lows, right? Then you have a tighter stop when you do that, and then just take it up to the upside, okay? So this is how fundamentals and technicals work together at a really basic level. And yeah, like you can make money starting out. All you need is patience. Like people just want to like get on the charts and like make money in the next 10 minutes, right? But it's actually quite difficult to learn to master the lower time frames. So if you want a strategy that is like dead simple, easy, this is it. Yeah, so I hope you guys got something amazing out of this, and I'll see y'all later. Peace out.